for CFOs, when they're hiring a head of tax, again, if I was the CFO and I say to you, look, I've never hired one before, but what should I be looking out for? How would you best advise a CFO if one of your clients said, hey, we're going to be hiring a head of tax, what should they be pushing the potential candidate on? Or even then for the candidate side, what are the skill sets that you think are key to get a head of tax role in this region?
Obviously the tax knowledge, but let's assume tax knowledge is a commodity.
Yep.
That's a wrong thing to assume, but let's assume that it's okay. The next thing is the candidate's ability to build a team. The next thing would be the candidate's ability.
Thank you for listening to the podcast thus far. The one favor I would ask, if you're enjoying what you're listening to, is to press the follow and subscribe button on whatever media platform you listen to us, as it helps us grow our network and grow the podcast. So thank you and enjoy the podcast. Welcome back to Alchemy Uncensored podcast. We're on our third season and we promise you that we'll bring more valuable insights into the financial and tax sector of the UAE. Today, we've got Dr. Peter Wilson. Dr. Peter is an international taxation advisor with more than 44 years of experience. He has a PhD in international tax law, qualified as a chartered accountant in Australia and the United Kingdom, has 2 master's degrees in tax and is legally qualified. He is also the UAE Ministry of Economy's via the ACCA subject matter expert on UAE corporation tax. He is a cross-border tax advisor with in-depth knowledge of the tax laws in GCC countries, and over the last 10 years has advised on tax laws in more than 75 countries. So, Doctor, how are we?
We're very well, thank you, Connor. And thank you very much for inviting me here today.
My pleasure. And look, we're very intrigued just to have a chat about your career, your story, but then also get a feel for taxation. It's ever evolving in this market, and it seems to be every couple of weeks there's a new sort of post on LinkedIn of something that's happened. So just keen to explore that.
It's wonderful being involved in taxation. It's never a dull minute. Mm-hmm. You think you understand what's happening, what the law is, and then you find at 5 o'clock in the morning there's something else that's come out and you have to read that. And then you find that the world's established way of doing things gets upended by the UN deciding to take over control of international tax setting. And then you see the election in the US upending that.
Yeah.
So it's very difficult to advise clients on what might be happening in the future because no crystal ball is really good enough to anticipate all these changes. So you always, more often than not, clients will ask you, well, how long will this structure survive?
Yeah.
How long is it good for? I'm being asked to spend a lot of money to design and implement something, but is it a waste of money? And they want to know how long things can survive. In previous years, it was not that difficult to say things likely would last for 5 years, 10 years, 6 years, whatever. But now that's a chore in itself to advise somebody on how long something will work. So those with crystal balls that are less fuzzy than other people's crystal balls really have a march on the marketplace, I think.
Okay.
And that's really all about what do you think is likely to be survivable? And what's likely to be survivable is something that has a commercial justification and something that's implemented on an arm's length basis. If you do that, you should be okay.
Okay. And how's your crystal ball then?
Well, my crystal ball is very clear at the moment. In this country, the crystal ball tells me that there's so much ambiguity in the corporate tax law. The ambiguity in the VAT law hasn't been totally cleared up.
Yeah.
But the ambiguity in the VAT law has led us to see a very aggressive position from the FTA in pursuing disputes, a very aggressive tax litigation position with the FTA, where they won't stop until they get to the Supreme Court. If that approach moves across to corporate tax, and with all the uncertainties in corporate tax, I see massive amounts of disputation in corporate tax.
Yeah.
I mean, there's one very simple thing in formation of corporate tax groups. You can form a group with a parent company, member companies, as long as there's 95% direct or indirect ownership. The FTA is saying that for you to have a grandchild in the same group as a grandparent, the parent has to be in that same group. Well, and the FTA says that in its tax guide, but that's not what the law says. So we have an instance right at the moment of a discussion with the FTA about their approach to understanding what the tax law says, and their approach doesn't seem to bear any relationship whatsoever with what the tax law is actually saying. And that's on something as simple and as important as forming a tax group.
Taking it back then, as we said in your introduction, very well-travelled person. You've worked in, multiple jurisdictions, and, at the moment, tax, obviously from a recruitment side, we're getting more CVs or more applications than ever for people that are outside this region, east or west of here.
Share some with me.
Actually, we have a few people share them. Rudika told me to make sure to flag them to you. But I guess the question, look, when we're speaking to candidates, we say, hey, you need to be here, or, you need to have this experience or that experience. But someone who, of course, you're like an encyclopedia of tax, I think, you've written books, you've done everything from that end. What are the differences, the challenges you would see for, let's just say, a younger Dr. Peter coming into this market from Australia or the UK or anywhere else in the world, if you were to give them advice in coming in here?
The first piece of advice is there's not one landscape here. In most major jurisdictions, there's one corporations code. In the UAE, there's not one corporations code. We've got the National Corporations Code. We've got the Corporations Code in the DIFC, the ADGM, DMCC, and a lot of others. To be fair, they're very similar.
And it's just for the listeners, this is the free zone. So you mentioned the different free zones, so DMCC, ADGM. So everyone's basically their own.
Correct. And the free zones are based on English law.
Yeah.
DIFC, ADGM incorporate English law, whereas the mainland is the normal UAE law.
Yeah.
So the first thing you have to understand is, if you're coming into the region, is don't forget about what you've learnt, but don't believe that what you've learnt can be easily transposed into this jurisdiction. What you have to do is you have to have an inquiring mind, and you have to say to yourself, well, this is what I would have done, or this is what I would have expected in country A. Does it work the same way here? Does it not work the same way here? You have to do far more research here to find out what the ground rules are here than what there are in other countries. Don't presuppose that you know what the ground rules are.
Don't assume.
Don't assume. Don't assume anything. Don't assume that you can walk down the road into the Marriott Hotel and there'll be a nice beer there, because it might be, but it won't necessarily be there. So that's the first thing. The second thing that you need to be aware of is that the businesses here, up until 2018, didn't really know anything about the word taxation other than for their investments in other countries. So taxation is something for the other person, not for me. Why do I have to pay taxation? Yes, there are now tax rules, but that leads into very complex psychological type problems or issues of, can I come up with a structure, or can I behave in a way that allows me to continue to behave how I was behaving before, i.e. not paying any tax? And we see a lot of people saying the tax laws are for other people, but you have to remind them of, if they persist in believing tax laws are for other people, and that they are found out, there are substantial penalties. And if what they've done amounts to evasion and criminal evasion, they can be sent away into prison for a number of years. Even the more simple approaches to avoidance can land up with massive fines. Fines here are much higher than what they are in other countries. So don't assume anything. Do a lot of research. Understand that you're dealing with families and companies that haven't had to be bothered much by taxation in the past and have to come to terms with a new way of doing things.
And then, for us, I guess for you, the nature of your consultancy is that, you're dealing with CFOs, heads of tax, they're a lot of your points of contact, and, just touching on what you've said about penalties.
Yes.
And as we see it usually, when VAT came in, there wasn't as many in-house tax professionals, but now more and more, I think once the penalties become material amounts, then of course the board are going to take a lot more notice of them within companies. So, without giving everything away, but, what are you seeing coming down the track? If I'm a CFO and I'm sat there, very green to everything and not really paying much notice, what do they need to be aware of, or is there things that are coming?
Well, the immediate thing that's coming is which has probably come already, which is your taxation provision in your 31 December 2024 accounts. So for most publicly listed companies, that's probably been sorted by now. For non-public companies, for all companies, you've got to file by the end of September. We all know there aren't going to be enough accountants or advisors in the country for everybody to file by the end of September. So a CFO would be very prudent to get his accounts finished as quickly as possible and to file as quickly as possible. One of the reasons for attempting to file soon is that the material that you have to either have available or upload in filing on transfer pricing is very complex. And it's not just related parties, but the UAE is one of the few countries in the world that requires payments to a connected person to have to be arm's length as well. So the CFO needs to push his or her team to finish the accounts early, to prepare the tax returns early, to do all the transfer pricing, benchmarking studies, reports, functionality analysis early, so that when September 30 comes around, the CFO will be happy that the company is not going to be fined. Because unless the FTA comes out with an amnesty or a deferral, if the return is not filed by midnight on the 30th of September, there'll be a penalty. I mean, it's like the same system as we have a client outside the UAE that had to make a VAT payment, I think on the 28th of December last year. It sent the money from the Netherlands on the 28th of December, but it didn't arrive until 2 o'clock in the morning on the 29th. So it got a 12,000 dirham penalty, even though it's owed a 2.5 million dirham refund. And the FTA wouldn't offset the penalty against the refund. That's another thing that people coming from other countries can't possibly anticipate. There's just a different way of doing things, which we have to respect.
Of course,
That's the country's way of doing things. But to minimise the damage to our own reputations and the company's reputations, we have to get on and deal with these things.
Yeah, of course. While we're on the point of CFOs, I know we were chatting just before we came into the studio. At the moment we're seeing, thankfully more heads of tax hiring, not as many as one would like, but there is more and more. And, the question we were sort of speaking about is for CFOs, when they're hiring a head of tax, again, if I was the CFO and I say to you, look, I've never hired one before, but what should I be looking out for? How would you best advise a CFO if one of your clients said, hey, we're going to be hiring a head of tax, what should they be pushing the potential candidate on? Or even then for the candidate side, what are the skill sets that you think are key to get ahead of tax roll in this region?
Obviously, the tax knowledge, but let's assume tax knowledge is a commodity.
Yep.
That's a wrong thing to assume, but let's assume that it's okay. The next thing is the candidate's ability to build a team. The next thing would be the candidate's ability to interact with senior management. The next point, I personally think it's the most important point, because it's very difficult for a CFO to flush out, and that is, what is the capability of the head of tax to deal with the identification of tax risks in the company, and how does the head of tax respond to contentious situations of there being a tax risk or not a tax risk, and what sort of mental capabilities does a head of tax need to be able to make the right decision on a timely basis, so that the company is protected from having a proper tax governance system in place, and that the CFO is protected against the board suggesting to the CFO that he or she is, through not having proper qualified and appropriately competent people to make decisions, that the company is liable to penalties and potentially getting named and shamed.
Yeah. Okay. And we had our CFO breakfast just gone on Friday, and we were chatting to a few CFOs, and for them with tax, the only word I keep hearing is transfer pricing. That's the it seems to be the pain that they're all going through, and I'm just quite keen to again understand, because for someone who's not a tax specialist like myself, you hear tax, but it is broken up into transfer pricing. You obviously corporate tax, VAT, but just really want to zone in on. Do you see that as the main pain point for clients of yours?
Well, it's a significant point, and that's because previous to corporate tax, the only relevant issue on related party pricing was whether directors were inappropriately dealing with assets of the company. Directors are supposed to be protecting assets of the company, therefore transactions should be on an arm's length basis. Now, if I remember the rules correctly, if there's a related party transaction in a group has to report on related party transactions if in total they exceed 40 million dirhams, and if each category exceeds 4 million dirhams, and the categories are set out in the FTA's transfer pricing guide. And surprise, surprise, the first 5 categories are categories that you would expect them to be. Don't ask me what they are. But the 6th category is something called other.
Okay.
So there might be 395 categories in the world. The first 5 are specifically dealt with, and then you have to deal with all of them in the other.
Okay.
So that, and the 4 million dirhams is for each of those categories. And then if you have payments to connected persons, you have to do the transfer pricing if the payable is in excess of 500,000 dirhams per connected person, and all persons who are related to that connected person. So if you had a payment going to the CFO for 475,000, and if you had a payment to the CFO's wife for 475,000, you put them together and you're above the 500,000. The test, one of the unknowns is on the connected party test. It talks about an owner or director or other officer. Well, an owner is pretty obvious. A director is pretty obvious, but another officer is not defined in the tax law. It's not defined in the FTA's transfer pricing guide. So this reverts back to the question that you asked me of a new entrant into the country. You've got to go and look at the relevant corporate law that prevails in the free zone or the national law for covering the jurisdiction where the company is incorporated, because the definition of officer is not the same in all of them. Some of them have company secretary. But in our view, any job function that has the word officer at the end of it, CEO, CFO, COO, any person who has responsibility for dealing with the assets is likely to be subject to transfer pricing. So this is new because before the CFOs and the boards and the managers did whatever they wanted to do. Now, if you're having a leasing agreement, one company owns the property, sister company rents, you've got to go and check data from RERA. If one company provides services to another, you've got to do a benchmarking study. Benchmarking studies require identifying information on comparable transactions in the region. Most of the databases, most of the publicly available databases don't have any publicly available information on these transactions in the UAE. Why is that? It's because the UAE stock exchanges are, relatively speaking, quite new. There aren't that many companies on the stock exchanges. So the parties that you want to benchmark against, you've got to go broader. So when you look at MENA, you'll find some companies in North Africa, you'll find some companies in Turkey, but 9 times out of 10, when you're benchmarking companies in the UAE, you'll end up looking at comparable companies in Europe. So this is the problem that the CFOs have. They have to get it done very quickly. There are many people who say they can help them, and there are many forms of assistance that people actually provide, and varying qualities and various pricing of assistance that's being given. And you know, we know, like it was on VAT, it'll be a couple of years before the FTA gets around to checking all this stuff. But they will check it, because this is going to be a very fertile area for raising money for the FTA. Because on most of these things, Connor, there's no one right answer.
What I'm sensing based on what we've discussed so far is urgency is a big thing for CFOs. And look, the honest reality is, of course, we've got Ramadan now starting next week, which, you know, for the most part, will slow things down, no matter what anyone says about it. Then you're already in April, then we're May, June, summer. And we know, again, this part of the world, it is quite seasonal where, you know, people have the accelerator on hard and then it comes off at times. So, and then we've got that month of September, which I think, as I said, the 30th of September will be looming for people. So, yeah, I guess it's very...
Well, we've decided on our own company that we want to have our return ready to be filed by the end of March.
End of March?
That's what we're doing. We originally wanted February, but that's proven not possible. But we're going for the end of March, and we want to.
How's that looking now? We've got 6 weeks.
Well,
5 weeks.
I think we'll probably get there. And what we're also learning from talking to friends in the marketplace, that there's a vast difference in fees that different firms are proposing to charge clients for helping them with their corporate tax returns. Some are very low, probably too low, and some are very high, probably too high. But there's going to be definitely not one size fits all in a price. So this is another issue. If a client traditionally works with one advisory firm and that advisory firm says, yes, I'll help you with your tax returns, and they put forward a very high fee, the client is going to be on short notice to try and find somebody else to do the returns if they're not happy. And it's going to be very difficult for them to find somebody, because the relatively few people who can do these things are already going to be booked up to do them. So I see potentially a lot of unhappy CFOs having to pay way over the odds for the preparation of the returns.
And touching on that, with your own firm, what makes you guys different? Because obviously, look, you've got, as you said, 44 years of experience.
We don't set about to be doing any compliance. We set ourselves as our tasks of just being advisors. A client has a fact pattern, has situations. What are the tax outcomes? and we give them advice. We're very methodical. We have one way of giving advice. We come up with a fixed work program. We write to the fixed work program. If a client wants us to implement, we'll implement. We don't do corporate tax returns unless it's for a client where we've given advice.
Yep.
We don't do VAT. Unless, again, if it's a client where we've given cross-border.
Yep.
I mean, we've got one client that's a French company that's having something assembled here, and it's being delivered to Kyrgyzstan. So there's a lot of complicated VAT issues there. So that's our sweet spot. But for preparing a tax return, VAT return, we won't do that. So we're spending our time in advising people on complex issues. Yes, we do transfer pricing. That's very much a sweet spot.
Yeah.
That goes hand in hand with the complex tax advice. Yeah. Because if we're doing an intragroup reorganisation, you've got to know an arm's length price for something to be sold. If you're looking at whether a client can fragment its business, one company into two or three companies, that could the compensation or the related party pricing can be relevant. So that's all part of that game. That's all part of that game.
And then with that, even for you, business-wise, I'm assuming business is going pretty good, but is it people that are coming to you, organised, saying, hey, we know what's around the corner, let's start the process now? Or is it, in general, is it clients that are a bit further down that may be exposed?
I think what we're seeing is people who have been running successful businesses, haven't had to focus on tax other than VAT, are now petrified as to whether what they've established is aligned and compliant, and threshing around for somebody to say that they don't need to change. But in reality, I don't think we've met any business that's come to us that is compliant.
Okay.
Don't see one that's compliant.
Yeah.
And that's just because their businesses are way more complex than for tax purposes and what they imagined.
What they think, yeah. Okay.
Yeah.
And are these guys now in general that don't have a tax function set up, or even imagine some companies that do, but is just they're not aware of it, or because that's pretty big?
No,
then.
they don't have a tax. Well, those that have a tax function set up haven't yet got to the point where the tax function is successfully implemented. They've got a head of tax, but the head of tax is grappling with a group of 30 or 40 companies that haven't traditionally had to worry about tax. Some of them haven't had to really concern themselves with VAT. You find situations where one company owns an asset, yet another company in the group reports all the income and all the expenses in its financial statements.
Yeah.
And you've got to wrestle with, how did the company that owned the assets allow this other company that's reporting all the income to use the asset without paying a fee, transfer pricing?
Yeah.
If the company that owns the asset should have been charging and hasn't, is there a VAT issue? The company that owns the asset might not be part of the VAT group, So, all these sorts of problems. There are legacy problems because companies didn't really need to focus on VAT, certainly not on corporate tax. So it's a massive job for a head of tax, firstly, to understand the sprawling nature of a group, because a lot of corporations, a lot of groups here own all sorts of assets in all different places.
Yeah.
So that it's a big job for a head of tax to get it under control, and then to have the people with the suitable and appropriate qualifications and experience to be reporting everything on a timely basis. What we are seeing is software coming into the market, though, that helps heads of tax assemble all the information that they need on one dashboard. So that's going to be more interesting, I think, as that comes down the pike.
Okay.
There's one particular company from the Netherlands that's got a very interesting software product that enables the CFO to, when a payment for an instalment of tax in Ghana, for example, should be paid and whether it has been paid, that kind of thing. So I think data and analytics is going to be very important to the heads of tax as it goes forward.
Obviously, the buzzword these days is AI. So, if you're happy to delve into a bit of that, because I imagine, our listeners, be it heads of tax or CFOs, how do you see it evolving? Is it going to change the game completely? Or, if you're a tax person, how do you view it?
I'll give you a very interesting story. You know my colleague Bernie.
Yeah.
Right. So my colleague Bernie decided one day to check out what publications there are in the UAE describing free zones and free zone taxation. So he went into artificial intelligence and it listed for him, I think, 10 books, all with authors that would appear to us to be Middle Eastern authors. Bernie then went online to check all those 10 books and not one of them existed.
Man, Bernie.
So the unwary need to tread carefully.
Yeah.
Another interesting example, our strapline, our experience, your advantage, we created that from artificial intelligence, which was quite amazing. So yes, the good use of artificial intelligence.
Yeah.
Artificial intelligence can help you write, but artificial intelligence is not going to help you make a decision.
Yeah.
And that's where I think it's important for the CFO to know that the head of tax has got the mental capability and the toughness to make the right decision when there are competing objectives here.
Okay. And then pushing on from that then, in finance, AI, some people say it's going to wipe out some people's jobs at the junior end from a finance perspective. But, in tax, if I'm a young up-and-coming tax professional, if I say, hey, I've done my university, I want to be a tax guy, what should they be focused on? Do you see AI replacing any actual, jobs within tax?
I think AI will replace the people who prepare corporate tax returns. I think data will have sufficient tagging in time for a corporate tax return to be prepared automatically through artificial intelligence and what have you. I don't have any doubt about that. I think complex decisions on tax can't be. I'll give you an example. One of the free zone concessions is income from something called qualifying intellectual property.
Okay.
Which basically means qualifying intellectual property is patents, trademarks, copywritten software, models, etc. And the income that can be exempted has got to be income that's arisen from R&D expenses that have been incurred.
Yeah.
And the R&D expenses can either be incurred by your company, a related company in the UAE, or an arm's length company outside the UAE. So I'm not sure that artificial intelligence is going to be able to make the connection of the income that comes from company A in India was derived from the expenditures that company B incurred in the UAE to an arm's length person sitting in Ukraine.
Okay. Yeah.
So I think judgments like that, now maybe in 6 months' time, artificial intelligence will be able to do that, but I'm not sure that at the moment. And I don't believe the FTA would accept an artificial intelligence calculation for something like that.
Yeah.
The FTA is going to want to see books and records. They expect you to be able to show the tracing. You've got to be able to trace from the money that this company paid Connor 2 years ago to the 1,000 dirhams that came in from this company in India to today. You've got to have that nexus.
Yeah.
And I'm not sure that without complex data, anybody can really make a judgment.
Okay. So for tax professionals, how is someone going to get this sort of knowledge?
The knowledge doesn't come overnight.
Yep.
There are courses that you can do. There are free online things. You can go and do the ORIFA courses.
Mm-hmm. Yeah.
You can go and do the DIFC Academy courses.
Mm-hmm.
But the best way of doing it, I think, is to research and write. Mm-hmm. The way I've done it over the years is that the more I read, the more I write, and the more I write, the more I can read and get better. So you've got to read the law, you've got to reread the law, you've got to publish. When we publish, we publish. We don't just publish on one dimension. We published a couple of weeks ago on comparing and contrasting a UAE Treasury company tax concessions with the tax concessions available for Treasury companies in Singapore and Hong Kong.
Okay.
We're about to publish either today or tomorrow, comparing and contrasting tax evasion in the UAE, Saudi Arabia, and Qatar. We've got another one coming, which has been written, coming out in a couple of weeks, comparing and contrasting the participation exemption in the UAE, Luxembourg, and Saudi Arabia.
Okay,
so by reading and understanding how similar concepts work in different countries, you're best able to give clients advice on how it works in the country that you want, and you're best able to give the comfort that the CFOs need, that the way they're behaving is aligned with normal practice in other countries.
Okay. And then I guess the closing question, which I'm sure, based on our conversation so far, penalties, all those little words which are naturally going to pique the ears, and obviously that goes hand in hand with the FTA. So I guess a real valuable bit of insight from your end, because at the end of the day, you see everything across the board, and a lot of your clients are obviously new, and even so the ones who are, think they may know a lot. Because the biggest thing I take from your conversations today is that CFOs, heads of tax, it's not really, you need to not to be told what you want to hear, it's what you actually need to hear. And I think a lot of people with that. So, for our closing sort of remark would be, for heads of tax or whoever who are in a company now, how best to go about dealing with the FTA? What sort of advice can you share with them that will actually, because it is so new for so many people, that if you were on that side of the desk, what would you be doing?
First thing is that you've got to be respectful of other people's opinions. Mm-hmm. That's number one. Number two, you've got to prepare. You've got to prepare yourself. You've got to be able to support your position with logic, with law, and with some precedent. Mm-hmm. You've got to be receptive to the views of the FTA, but you've got to be able to be strong enough to defend your own position. If you've identified a mistake in your own returns, you need to immediately make a voluntary disclosure. You certainly don't want the FTA to find out that there's an error, because the penalties go through the roof. So that I think that if you behave that way, you'll reduce the misunderstandings. Our experience so far is that a lot of the people that you deal with in the FTA, they're developing their knowledge more on a silo basis, probably a similar sort of basis to the development of knowledge in Big Four firms, where it's more silo-driven. We're more across all the silos. When you're dealing with somebody in the FTA, you've got to understand that they will be repeating what they've learnt in their silo.
Yeah, of course.
But it won't necessarily be a full explanation of what the true position is. So you've got to be strong enough, you've got to be courteous enough and respectful enough to put your position. In the end, if you're going to get into an argument with the FTA, it's not one for the faint-hearted to go through the legal system.
Yeah. No one likes getting lawyers involved in any case.
No.
Okay, well, look, Dr. Peter, we're going to close on some quick-fire questions.
Right.
To, let our listeners get a better feel for you as a person.
Oh, okay.
So the first question, if you could go back to being a child,
yes,
what would your dream job have been? Or are you in it now still? Or if you could have went down a different...
No, I can answer that.
Yeah.
This is an easy one, and I've told a lot of people this recently. Oh. I'm Australian by birth, and I used to play golf with my stepfather every weekend until the age of 11. And I realised at the age of 11 that I wasn't going to be able to make any money as a professional golfer. Yeah. So I stopped playing golf and started learning to be an accountant and a tax advisor. So my dream job would be a professional golfer.
Okay, perfect. And then what's the one thing on your bucket list?
I'd like to go to a yoga retreat in India.
Yeah?
Yes. I've been trying to convince my wife to go with me
to across the water.
A yoga retreat in India, but I haven't done that yet. But I would like to do that. And
then we'll just close on, what's your one bit of advice, you give to listeners, just again pushing back probably on the tax up and coming tax professionals.
I think not to be demoralised or depressed by the amount of change. See that as an opportunity. The world is their oyster. There's so much opportunity for a tax professional. It's one of the few professions in the world that's truly translatable and travels. Look at me from Australia to London, London to New York, New York to London, New York and back to Australia, London and here. Yeah. So, it travels. So you can do it, but you've got to be persistent. No, perfect. Well, look, we hope this podcast has provided you with some useful tips and advice, and we look forward to seeing you on our next episode. So look, Dr. Peter, on behalf of the team at Alchemy, thank you for coming on. My pleasure, Connor. Pleasure. Thank you for having me. My pleasure. Thank you.